Allison, as an owner, you've got to be happy about Amazon's results. I guess we'll call this the anti-Facebook.
Yeah, Amazon's results, again, just showed the incredible benefits of their customer-centric strategy. You know, the company adding more in terms of revenue yesterday, adding almost 15 billion in the quarter, which is the equivalent of Facebook. This year, Amazon can add 55 billion in revenues. That's the equivalent of adding a Facebook. That's what Facebook will have in total revenues this year.
Wow. So as a fund manager then, Allison, what do you do? Do you buy more? Do you buy stocks that are in the halo? Do you just buy more technology? What's the action to the reaction?
Look, we think technology is continuing to disrupt more and more sectors in the old economy. The FANG stocks, it's just an acronym, but when you look at Facebook, Amazon and Google, they have net cash of over $240 billion. They have huge scale benefits that bring benefits in unit economics, benefits in network effects. And we think that that can continue. That $240 billion in net cash is from Apple, Alphabet and Facebook, gives them a lot of flexibility. And, you know, valuations have gone up, but they have that cash flow behind them. Amazon's a cash flow machine as well. So we think that the FANG stocks continue to do well, particularly Alphabet, Apple, and Facebook as well. But
I know from looking at your fund and also the notes, Allison, that you are not a believer in Netflix, not because you dislike the company, but the valuation to you is a little bit too hot to handle.
Yeah, the valuation, Netflix is a name we've owned historically. We think they've got great barriers to entry and they're creating real scale benefits because no one can match them in terms of content spend, but they're burning cash, unlike the others who are sitting on these huge net cash piles. Netflix is still burning cash, so the valuation there is just a bit too rich for us. And you know, we think that there's just better opportunities in some of these other names and other names in tech just now.
So you're going to add more Amazon to your portfolio today, Allison?
We like Amazon. It's had a strong run. It's up over 45% year to date. And we think the mix shift benefits of that growth in the highest margin businesses, Amazon Cloud Services and advertising, can continue to drive it forward. But we do see some better opportunities. We have been adding more into Alphabet, which has actually lagged the other stocks year to date, and which we think is just coming out a period of you know, having some difficult compares on the YouTube business, on margins, and we think that, you know, there's some great optionality on Waymo and autonomous driving and the long-term outlook at Alphabet.
Quickly, did you buy any Facebook on the weakness yesterday, Allison? Are you one of these believers that it was just way oversold?
Look, Facebook's had a big decline in market cap terms yesterday, but you have to put it into context. The stock's still flat year to date. It just came back yesterday to where it was in May. We think that Facebook are going through some growing pains, but it's a tremendous franchise. But we think that there's some growing pains around the product transition that they have and around some of the regulatory issues that they're still managing through. But it's a tremendous franchise, and this management team have executed on product transitions before, and we think they'll do that again. So it's definitely a name that we'll look to add to in the future, but not quite yet.
Not quite yet.